All right, that should work. Welcome in, everybody. Good evening. We're going to get this going in just a few minutes. Just going to give everybody the chance to hop on in, some of the team to get in here as well. Go ahead and start sharing my screen. There we go. All right. How's everybody doing tonight? Quiet. Why are you guys so quiet? Kyle's chilling. SK's having a solid night. All right. Happy to hear it. Good to see you again, man. I believe you were in the last lecture. I feel like that name's familiar to me. Hey, Chen. What's up, Husky? Good to see you. Waiting for some other members of the team still. They should be in here shortly. What's going on, Neekin? Welcome in. Good to have you. Just going to give it a few more minutes before we get started, everybody. So hang tight with us to get everybody organized, all in here. What's going on, Vinny? Good to see you. Is this Dirty River?
Hey, Testy.
What's going on, dude? Long time no talk.
Yeah, imagine seeing you here. It's been a while.
Yep. Oh, Norman's in here. I wonder if Norman has anything good to say tonight.
Can you check SMCI, VRT, BST, IBS?
RMBS has gotten kind of stomped out. We're not going to check those tonight, Norman. We're We're not going to check those tonight. Sorry, buddy. All right, we're still waiting for a couple more of the team to get in here. Uh-oh, we got flips. Uh-oh. What's up, flips?
What's good, brother? How are you?
Oh, I'm doing great. Long time no talk, dude.
Yeah, man.
Happy to have you in here.
Yes, sir. Good to be here.
Tilio's supposed to be calling in. He's doing something sketchy. He's going to call me on Discord, and I hooked up a speaker, and I'm hoping that his mic is going to get picked up by my mic. We'll see. I think it'll work, though. All right. Just going to give it one more minute, 2 more minutes, then we'll get into it. What's up, Mike? Welcome in, buddy. It's good to see y'all, everybody. Welcome in, welcome in. Doing well, Rudy. Thanks for coming in. All right. Well, it's a couple minutes after the hour here, so I think we're pretty close to getting started. I'm going to send out one more message to our team. Let us all know we're getting started. See what other staff that I could round up in here, but I think we got the perfect crowd. We got River Flips. We're going to have Tilio calling in here soon, so I think we got everybody we need here. You need to make 5 figures tomorrow. Any definitely not GameStop. I think that's the best answer that you're going to get tonight. Some people got to hear it. All right. Let me send out one more message letting everybody know we're getting into it. Oh, we got Empanada joining in. Welcome in, Empanada. Give me 1 second to give you some permissions to chat. All right. Cool. We got a nice full house. Yeah. Want to see if we can at least break 100 tonight. Should be worth it. All right. A couple minutes after the hour, so I think it's surely a good time to get started. So welcome in, everybody. Welcome to the lecture for this evening. For those of you who have been to one of these classes before, you might have heard a similar spiel the last time we did one of these. But the big idea behind this lecture is we call it like a podcast lecture, but really what it is a big group of our staff team, and we pick one topic to kind of focus around and start our discussions, and generally go from there. So the big idea of tonight's discussion is going to be to talk all about current market conditions. We're going to talk about the fundamentals, we're going to talk about the technicals, and we're going to talk about where we're all looking to trade from here in terms of higher, lower, specific names we're looking to target, etc. That's the big idea for tonight. It should be absolutely useful for each and every single one of you in here. And I can also guarantee that everybody will learn something tonight. If you don't learn something, though, we do have that guarantee backed. Dirty River is going to be providing Cash App support. So if you don't learn anything, go ahead, send him a message, and he'll make sure
Here
to
we go again.
he'll
I'm
be able to
still
help you out.
recovering from my Zane trades.
Yeah, he'll be able to help you out with some funding if you don't learn anything tonight. So you're guaranteed to learn something tonight. If not, go ahead and hit Dirty River up. But that's enough of that. Let's introduce the crowd we got in here tonight. We're joined by Dirty River, Empanada, Flips, and we're also going to have Tilio in here at some point. He's going to be calling in some backdoor ghetto way that I'm going to hope works. He says he's trying to log on to Zoom. Looks like he's trying to do something. All right. Oh, he's here. He's here. Wow. Okay. He figured it out. Cool. So yeah, like I said, we got a good team of our staff here. I feel like we should give everybody the chance to just introduce themselves really quick. I'm sure you know everybody in here, but we might as well say hello. River, why don't you say hi? And yeah, that's pretty much all you're probably going to say anyway.
Hello.
All right, Empanada, say what up.
What's up, guys? How are you?
Flips.
Sounds so awkward. One says hello, the other one says what's up. So short. What's going on,
good.
everybody? You guys know me as Flips. Hopefully you do learn something new here. If you don't, River send you some monies from what I heard. So I haven't learned anything today.
Yep, don't forget that. And then last but not least, Tilio, say hello if you can.
Yeah, can you guys hear me?
Yeah, we can hear you. Actually, I'll turn
All
my
right,
speaker
all
on.
right, what's up, everyone? Yeah, hopefully we don't learn anything. We get some free money tonight from River.
All right. Awesome. Thanks everybody for being here. Appreciate you guys all in attendance and also our staff team. Let's get right into it. We got a lot to talk about tonight. For those of you who haven't been paying much attention to the market over the past couple days, you might not be aware. We've been on a significant move higher. Obviously, since October, we've had this kind of uptrend continuing from those October 2023 lows. So big picture, market's trending higher. A lot to unpack, at least in terms of the information that we got from today. I want to start this lecture out taking a quick look at the fundamentals, just because I think one thing that so many people don't realize or don't really understand is that on a macro level, the market as a whole is driven by the fundamentals at this point in time. And those fundamentals are mainly related to pieces of data that the Fed is looking for to determine what their target interest rate should be. And for those of you who don't understand what that means, I'll give a quick 1 to 2 minute introduction here. If you live in the United States, you might be familiar with the term Federal Reserve, or maybe have heard it before. The Federal Reserve is essentially the central bank for the United States. And they've been really prominent over the last couple of years through COVID, only because of the volatility in interest rates, and also due to COVID, all the extra money that they've been spending and creating. Big picture, though, is that the Federal Reserve, at least in terms of what we care about, sets the target interest rate of, call it, their bank and of their funds. And at the end of the day, other banks loan money from the Federal Reserve, which ultimately loan that money out to us for things like mortgages, car payments, et cetera. So that target interest rate that the Federal Reserve sets really ends up being the price of money in the United States, which, as you might be able to imagine, can greatly impact consumer spending. For example, if car loans become more expensive, you're probably less inclined to purchase a new vehicle. So a couple things in terms of the last year or so that have been quite important to pay attention to include some data points, some specific data points that the Fed has been looking towards in order to determine what that target interest rate should be, as well as what their target interest rate is, as well as their kind of projections for when it'll change and what it'll change to. So today, this morning, we got another CPI print, which is the Consumer Price Index. It essentially is kind of one of the Fed's accepted gauges of inflation in the United States. And also we had the FOMC meeting, which happens about monthly. I think sometimes they skip a month here and there. But we heard from Jerome Powell. He gave a speech, and also the Federal Reserve as a group delivered their summary of economic projections. So I'm going to bring that up on the screen, and we'll start to talk through kind of each point in general. I think it'll probably be most important to start with something a bit more simple, which is the CPI data that we got this morning. But that was a lot of me talking. I don't know if anybody else wants to take a stab at it, if it's Tilio, River, Flips, Empanada. But yeah, I mean, who wants to give their first take on the CPI data that we got this AM? Don't be too excited, guys.
Can you hear me?
Yeah.
All right. I don't really go through it yet, but I think the main thing, I don't know the main thing, but really what's been hot in it has been shelter and auto insurance, obviously. So we talked about that a while ago. Shelter's obviously going to lag, not necessarily lag. There's more of a supply issue there. But auto insurance is going to lag. I forget when it was on the newsletter, but you had auto prices, they kind of started the rally higher, then they peaked. Then you had auto repair, same thing there. Lagged the move higher of used car prices, lagged the peak. So I think you're going to see that out of auto insurance. But if you look at it, auto insurance, I believe it was down about 0.1% month over month, but it's still up 20% year over year. So that's where I think you see some of that kind of hot air coming out of these prints is going to be some of those areas that haven't really peaked yet, but everywhere else in the sector, if we're talking about auto altogether, has peaked. So I think you're going to see that trend lower. So I think that was the highlight of today, really more so than Powell, in my eyes. But on the newsletter, I'll be going through CPI more. I really just looked at some of those hot components.
And Tilly, I want to just kind of ask you some probing questions just to make sure everybody's on the same page. Just to be clear, so everybody understands, you're essentially mentioning specific components that make up the CPI calculation that have kind of either lagged or led the trend of the overall number. If you want to talk a little bit about
some of
why,
the stickier points is what I'm getting at. Obviously, we all know shelter prices has been kind of the hardest to come down. Everything else, because a lot of the inflationary pressures was supply driven. So the whole supply shocks kind of worked through themselves out ever since COVID. So now you just kind of have these final lags. And there's some charts out there. I forget what you look for, but when I'm talking about a lag, you can pull up like used car prices overlaid with parts overlaid with auto insurance, and you'll kind of see the historic trend there of one spikes first, the other follows, and the third one. Same thing on the downtrend, and the order is usually car prices, parts, and then insurance. So that's kind of what I'm getting at there as far as the lag goes, and yeah, just certain components of the inflation report. But like I said, on the newsletter, I mentioned services inflation might be a cause for concern. I haven't looked into the majority of those yet and see if that was true from I forget what that some of the services job last week. I think out of the ADP employment report, it might have been where most of the job gains were in the services side of things, not so much the goods.
I got a question about the shelter stuff, Tilia, because I always read the report, and it's shelter is remaining sticky in that it's not coming down, but it's not going up. I'm not going to remember the exact number, but I swear it's been, up 0.4% for, I don't know,
yeah,
4 months. Yeah, oh yeah, there we go, 4 months in a row. And so, you know, we had the one spike beginning of the year, always kind of expected, some inflation at the beginning of the year, but how much do we want it to go down? Because even today, Pal mentioned, he said, housing will cool, but there is still going to be the supply issues that were there pre-pandemic, post-pandemic, all of that. And so hearing Pal say that, how much can we really expect out of shelter? I mean, we're no matter what.
I think if we want to, quote the whole kind of neutral rate, I think the whole neutral rate the Fed's been going for really anything inflationary is just pre-pandemic for the most part. I don't know where shelter was at there. Yeah, we've had a supply issue on housing ever since the financial crisis. So,
Really, yeah.
what, 15 years now or so that's been. So, but obviously the whole pandemic, everything with low rates, the free money era, and then high rates. I mean, that's just kind of really accelerated prices and everything. Because right now you got people, I think probably 75% of homeowners either paid cash or they have like a less than a 3% mortgage. So the
Yeah,
problem right now is no one's selling their homes and moving up in mortgage rates. So
yeah,
and that's something I think the Fed's got to think about too. I know on the press conference today, I believe Powell said that inflation needs to come down for home price. I forget how he worded it. Basically, he said that for housing prices to come down, they need inflation to come down so that they can cut rates. But
yeah.
if you think about it too, one thing that's in the back of my head is cutting rates might even help them in that sense, because obviously that 10-year is kind of the proxy for mortgage rates. So if they were to cut rates, mortgage rates come down as well, and maybe that'll loosen up some of the supply issue out there. I don't think it'll be big though. Like I said, I mean, who's going to want to even go from a 2.5% mortgage to a 5% mortgage?
Yeah.
So
And he said, on the housing situation, it's a complicated one. Rates have a significant effect. The best thing we can get for housing is get inflation down so we can get rates down. But we still have a housing shortage, same as pre-pandemic. So it's really like that's what I was just trying to figure out was, where can you know, how much lower can we go? Because, there's the common misconception that these inflation numbers go down and prices or, costs go down. And that's not a guarantee, that doesn't, and housing is one place where you can see, or shelter is a place where you can see a reduction in price. But I think that people might kind of have a skewed view of what the housing, housing, like the shelter portion of inflation coming down doesn't necessarily mean people are going to save money. They'll only save money if they're purchasing a house at that lower rate. Is that correct?
yeah, no, and when I'm talking about inflation is as a whole, obviously shelter's been, a hot point on there, but you're still getting some air kind of out of the tank in every other place, both
Yeah.
from the supply shocks from COVID. And then on top of that, and we're not there yet, but I forget what it was, maybe 2 weeks ago or so, some of the consumer spending numbers that we got. So that's a big part too, is just for inflation broadly speaking, is a lot of it's the consumer. I mean, that's 65% of GDP is the consumer. So, you know, if we get to a point where the labor market, even though last week I think could have been a good glimpse of that, of, you know, it's still a hot labor market, but it's kind of softening a little bit. But the other issue you got is fiscal policy right now is outweighing monetary policy. So you got to, you know, DC, and it don't matter who's in office, they're going to continue to spend like no tomorrow. So that's obviously going to affect inflation too. But if you look at it broadly speaking, where we came from the peak in, you know, what was that, 2021, 2022, 9% down to, I don't know where core PCE last printed, maybe 2.6%, I want to say. So,
Yeah.
you know, we've made a lot of progress, and, you know, is it really that big of a deal, that 0.6 of a percent? I don't think so, but that doesn't mean that the Fed has to cut rates right now. To me personally, they've kind of achieved their dual mandate for the most part.
Well, yeah, and
'Cause I don't think any economist out there would have thought that we would bring inflation down like we have and still have this red hot economy.
yeah. That was an interesting thing that they talked because they bumped up the inflation by year end, to expecting a 2.8. But then we were at, you know, like you said, I believe 2.6, something like that. And so that was actually one of the questions that I thought was really good. Was one of the reporters asked it and they said, you know, well, so you're telling us it's 2.8. We're already below that two, you know, we're below your year-end goal. Well, why don't you cut a rate this summer? And it was Powell kind of stumbled. He didn't have a good answer for that. You know, he said, of course, what they always say, you know, they have to wait on data. But I thought that it was pretty interesting to say, like, we've kind of met our goal, you know? I mean,
Yeah, no, and
you take auto insurance out and like the goal is pretty well met.
you take your core numbers, you strip out auto and shelter, and you're below the Fed's target right now. But yeah, I think that was a female reporter that asked that, but also Steve Leisman. He always has good questions, and I think he was the first one to ask him too about that, because yeah, I believe the last core PCE printed 2.6%, and the Fed, I don't know what their March projection was, but yeah, they hiked up year round to 2.8%. And I think Powell said something about just being conservative there. But I think that's the Fed you're going to see, because, you know, with what the Fed says, they can really kind of drive that euphoric feeling. And I mean, you can look around right now at obviously the meme stocks and some different kind of polling numbers too. And the euphoria and that kind of speculative buying is near peak. So, you know, it would make no sense for, you know, I think what they're doing is smart, but I think the market's going to read through it. They know the next move is going to be a rate cut, and, you know, the Fed ain't going to say we're going to get a rate cut until, you know, the meeting that we actually get it.
Get it.
And
He did
what was the
really
other?
he did beat home that point today that I wrote it down. I don't remember what it was, but he said there is not a single person, not even one person in the FOMC that is expecting a hike. So it was like I mean, I liked to hear him really beat home that point because, you know, people like to get, you know, expect some random hike out of nowhere. But it was interesting to hear him say that point, and it came after that question you talked about where he said some conservative forecast or something like that, but then he said, which I agree with, 2.6, 2.7 is a really, I think his words were a really good place to be. So, I mean, that says the Fed's doing a pretty dang good job so far.
Yeah, no, and that's I believe I took a note on that too, which was a change in tone. Before they would mention the possibility of hiking, but in the press conference before the Q&A section, he did his normal spiel about, you know, the hot labor market, if it doesn't weaken or if inflation remains sticky or maybe even kind of moves a little bit higher too. He said something along the lines of they're prepared to keep policy restrictive to where it is. He didn't say we're prepared to potentially hike. So that was, and there wasn't much to find dovish in both the new summary of economic projections or the presser afterwards. But that was one point there. Powell at least stripped out the talk of the potential to hike. And I think there was only one more kind of dovish point in there. But that was definitely something that was noteworthy to just the change in language.
Yeah, and there was a shift in language because I agree with you. It definitely wasn't, one of the more dovish pals that we've had, but there was like an odd note of like optimism while sounding kind of hawkish, Like, I mean, he would say things, I mean, like that, when talking about PCE, well, it was up for a few months, but this last reading, that's exactly what we want to see. And hearing he normally doesn't say those kinds of things. So you did sense a little bit more optimism in him than normal. At least I thought so.
Yeah, and there was one other thing that he said there too, which I don't know if you can take it as optimistic, but it was kind of what I noted on the last newsletter about last week's kind of head scratcher of an employment report on Friday, where you had whatever that number was, 270 job gains for the month on the establishment survey, but the household survey, a loss of like 480,000 jobs. And he said something in the Q&A section, I believe, about I don't know if the word he used was like ambiguity or something like that, but it was around not even the accuracy, but is it
Oh,
a
like
true
they were
read on the
juicing the numbers. I remember that. Yeah.
yeah, so I mean, and the Fed's got their hand, on the data better than anyone else. So that's kind of what I was getting at is we sold down briefly on that employment report Friday, but if you really strip down the numbers, I think we saw the same trend that we saw all week with those three other data points. And that's still a hot job market, but it's starting to soften. So um, now how the market takes that, depending on if things really soften, I don't know. I think if you see jobless claims shoot up over 275 to 300,000 one month, and the payrolls number maybe less, sub 120, sub 100 job gains for the month, then I think that's probably where you lock in some gains, because that's I would say that's more along the lines of we are going to get or should I say there's a better chance of a recession there. So those are kind of the numbers I'm looking for when it comes to the employment picture.
Yeah. And that was another interesting thing from him on the employment stuff was really that's their only worry right now. I mean, and like he said, I mean, he repeated, and I love it when he repeats the basics that the Fed has two goals: maximum employment and stable prices. That's their job. And he mentioned many, many times, if we see an unexpected weakening in the labor market, then the decision might come to loosen policy a little bit more rapidly. And that's him still being slightly worried of missing on the perfectly soft landing. At least that was how I took it.
Yeah, and obviously we want them to cut rates because inflation's kind of at their target or near their target, not because the labor market's weakening. And then I would say you have that perfect landing. No hard landing, really no landing at all. But all in all, I would say this was definitely the statement, more so the summary of economic projections was more hawkish if you look at it over of the March one. And now the Fed does, because this was a question point too, and I think even a reporter asked that. I mean, the Fed gets some of these data points early. So the first day of their 2-day policy meeting was Tuesday, yesterday. That's where they're making all their decisions. And then someone brought up, if the SEP was changed based off this morning's inflation report, and he said something to where he gives the voting members the option to do that. Usually they don't. But then he said that last month's CPI was taken into account. So even though that new SEP report was, I would say, more hawkish than that of March, they had this morning's data taken into account when they were drafting that up. So all in all, it was more hawkish. But like I said, I think the market probably sees through it. You might say we sold down today, but I mean, it was, whatever we were up, we kind of closed where we opened at with that gap up. So I think that if you get another dip tomorrow or Friday, I think that'll be a buy into next week. I don't think we're going to get that, but maybe we do. I would definitely buy that dip. Me personally, that's just my bias right now. And I'm still targeting, I believe it's 54.57 on SPX. We were, I think, 10 points shy of that today.
That was interesting. I remember that question where he said, he said like, uh, you know, do did anybody change their opinions after this morning's data? And he said to them, you know, this happens, which talking about CPI being released on the same day as FOMC, which is actually pretty rare. But he said it happens, and I allow them to, or I tell them they can update if they want, but most people don't change their opinions. And then he kind of went into it, and one of the next questions was, well, we had three bad, hot readings on CPI to start the year. If we get three good readings in a row, will that give you like will you want to cut after that? And his response to it was like, no, it's not, it's not that cut and dry. It is still, we need consistent data believing that we're going to go down to 2%. And I thought that it was really nice to hear him say like, no, it's not, we had three bad ones, three good ones doesn't mean a cut. I'm curious to see how it all goes. He seemed optimistic about the one today. But it'll be really interesting to see what the Fed decides to do going forward.
Yeah, and I would say right now, I mean, you got to strip out the first 3 months or at least 2 months because you have that seasonal effect in prices. That's when most businesses raise their prices. It's really the only time to do it in the beginning of the year. And then that works through the pipeline, through the vendors. That's usually why the first 2 or 3 prints in the month, you might get a hot report. So these last two were decent. I would say that's kind of a fresh start. So at the end of the day, you kind of just got to be like the Fed. They're going to take it data by data. So, I mean, the inflation reports, mainly the PCE report, as well as the labor market. So obviously we get, it's not really a big event, initial and continuing claims every single week, but that would probably be your first sign right there. Is if we see any spike in claims, plus 275, plus 300, then there might be some real quick weakening that probably wasn't expected. So, but yeah, other than that, I would say more of a hawkish. I mean, they went from March, I think, what, 3 cuts. This SEP, they had 1 cut. The PCE year-end average you mentioned, like 2.6% in March, now 2.8%, and that's above the last read that we got. Unemployment still kind of the same. I think 4.0 this month, 4.1 or 4.0 this year, 4.1 next year. Trying to think if there's anything else in there that
I got it up on screen.
the last thing is what do they have? I think the funds rate too. Of course, that takes into account though that they're taking out 2 cuts this year, but that's what at 5.1 right now for year end.
Yep.
So all in all, March to now, the change here is definitely more along the hawkish side of things, but that's kind of how they have to be. I mean, these are just projections. It obviously changes every time they release new ones each quarter. So, but like I said, let's we get a dip tomorrow because I mean today was a pretty good day for breadth. Obviously, small caps finally participated. The 10-year, I believe, it broke back below that key 4.31 level that I had, which is I think a swing low from March or May. So that's a key level to watch. 4.31 and then 4.5, of course. But today, I think 8 of 11 sectors were up. Obviously, technology led again. It'll probably lead again tomorrow following AVGO's earnings. Apple's kind of been a killer there. So, but you definitely want to see some of those, consumer discretionary, some of your staples, industrials. You want to see all these other sectors that have really been not participating the last 2 or 3 weeks start to get some legs. And that's if you can have a broadening out to this rally, that's when you can go higher. But if it's all tech based, then I would say expect some choppiness. But I do think that if we get a dip tomorrow, or maybe we don't get a dip, but I do think that the market in the near term, at least, mostly because of the inflation report, I think they'll see past the any way that you can kind of make this more of a hawkish Fed meeting near term. So, and then we'll see how July goes.
Awesome. Cool. That was super detailed, Tilio. Thank you for that. The one question that I saw come through that I think might be interesting for you to kind of explain your methodology here. I think I have a guess for the answer, but how did you come to this 54, 57 level as a target for the week? Are you using fibs? Is it something else?
Yeah, that's a fib extension, and without being behind the charts, I can't tell. That might have been from. I don't think it was from it came from a major swing, but I don't know if it was the um, post-COVID highs to post-COVID lows, or the pre-COVID high to low, or a more recent one. But it was a major high to low swing. So that 40, 54, 57, and I had it, I think, on the last newsletter, and that should be color coded too, where you can see where I drew the lines from. But yeah, it was like what you have right up there in that chart. Like you can take one from one of those swings that you have there. So like the one you're touching right now, I don't know if it came from that one, the one prior to that. Might have been the April swing, to be honest with you, but I believe it was the. I don't
This
think it
looks
was the one.
close. Is this
But
it?
anyways, that was the. If it's 54, 57, because
On the
over that,
yeah,
I
on
don't
the
really
dot.
have. Yeah, over that, I don't really have anything close. But then what I'll do is anything intraday. So, for example, if we push above that um, tomorrow, then I would run another extension from that towards the end of the PAL press conference today, where we hit that new intraday high, and then I'll run that to the closing low, and that'll give you. They won't be serious resistance levels, but you'll definitely see a little bit of action around them. So, but that's what I do a lot of the times if we're at all-time highs here, or I'll look at some of the Bollinger Bands. But if it's a major swing and you're coming into these targets, then they're going to have some weight to them. So that's why I like those. But it's not like I'm taking these new extensions every day. So that one's been up there for a while. I think we were still trading at maybe 5,200 when that was still on the chart.
Yeah, that makes sense. Very cool. Flips, Empanada, I know you guys haven't been able to provide too much on the fundamental side of things. What's your guys' thought on technical sides? What types of trades are you guys focusing on into the end of the week? What are some names you're targeting, and maybe give a little bit of reasoning as to why? And if you have anything to talk about in terms of fundamentals, I think now would be a good time to add that before we close that part of the discussion out. And also any questions that anybody has that came up based on what Tilio, River really got in depth on, feel free to go ahead and throw those in the chat. But Flips and Bernard, I'll pass it to you. What are some things that you guys are watching at the end of the week?
What's good, brother? Two things that I'm watching. As you know, SPY is all-time high. So
Hang on.
then I'm watching pretty much levels on the upside to see if we continue this run. Of course, with Nasdaq and SPY, any small Fibonacci level supports. The first one that I'm watching is AMD. There you go. On the 4 hour, we can chart this up on the 4 hour real quick for what we have going on. You can zoom in to the last from there. Yep. No more there. So there you go. Now you can grab that from the top, from the consolidation. There you go.
Thinking like talking like that.
Correct. And then grab it from the bottom, the low as well. Correct. All the way up.
Like
No, to
this?
where you had your base. There you go. So this is one thing that I'm watching, and I also have that base that you have there. So now you shift this over to the hourly.
Here, let
And
me
if you
turn
notice
on
that
pre-market really quick.
the squeeze that AMD is creating tighter and
Oops.
tighter and tighter. And this is one thing that I'm watching for tomorrow. I think AMD is getting ready for that little small gap that you see right there on the upside. Correct. So I'm watching the consolidation. That's one trade that I'm watching towards tomorrow. And all I'm looking for is timing sells later when the market opens to give me a proper support. The next one that I'm watching is Meta. And you can zoom out on that. Yep. Of course, you always start in the 4 hour. You can pretty much do simple levels there on Meta. Yep. And then the one more on top on the peak. No, you can do that
I
one.
understand.
That one right there. Yep. So and then shift it again to the hourly, correct. Now, if you look at Meta, it created a base today on pre-market lows. Right there. Yep. You can zoom in a little bit more so people can see it.
I think you went missing.
No, can you hear me?
Oh, yeah.
Okay, so Meta created a support around the 506 or 507 level. There you go. And that's exactly, if you look at a whole day consolidation, that's another one that I'm looking at for tomorrow. I know tomorrow we're supposed to have some kind of news at 8:30 as well. Let me see here. I had to write it down. I believe it's going to be a PPI. That's what we have. Jobs claims. Everything's going to be at 8:30.
Sounds reasonable. Yep.
We should be having that. We should be having that. So that kind of news is going to give me some kind of idea tomorrow for us to be creating. But those two are my main watch for. And of course, you have your main ones, Nvidia and Apple, that we've been trading for the last 2 days. So, but yeah, that's ridiculous to see.
I know it's absolutely nuts.
But yeah, AMD and Meta, main watches for flips tomorrow. And I've been calling since SPY was at 500. I've been calling SPY 550, and some people were laughing. And it's kind of crazy now. See SPY at 543, huh?
It's getting close. It's the
Yeah.
same when you were saying AMD 200 at AMD 50 or something like that, right?
It was AMD 50 and then AMD to 200.
Yep. Very cool. Appreciate that, Flips. What about
Yep.
you, Epinata? Anything that you're paying attention to into tomorrow?
Hello guys, how are you?
Apples.
I'm well, all of it, like like Flips follows AMD, I follow Apple, so I was expecting a move, not this big of a move, but Apple pay out pretty well. And I'm trying to see what other names are beaten down for opportunities. I was watching banks, JPM and Morgan Stanley. I'm just looking for opportunities on the longer term now that they are a little down. Another name that I've been following, and that's why we have to leave this on the competition of Nike. It's growing and growing for smaller ports. It's a great place. It's not that expensive, and it's been given good moves day after day on a on a positive strength right now, going up and up. So I'm just waiting to break 44.71, and from there we can keep going to 46.83 and 48.94. So I'm gonna keep watching those names, but JP Morgan and Morgan Stanley, I just like to see how the banks are gonna react to this news. And remember, most of the technical names are already up. The technological names, but I'm trying to see what's beaten to try to buy for the longer term. So if banks are beaten right now, I'm gonna see if I can get into some longer positions to see if we get a bounce eventually. So I'm looking at those. Meta was in my radar too. I want to see. I have Meta. It's on a lower bounce of a upper trend. So I want to see that it's not gonna go sideways tomorrow, but it's gonna actually go higher. So I'm keeping an eye on Meta, and I'm looking at other retail names that they're being also kind of performing a little bit below and a little laggards, like Lulu. Lulu is a name that we used to trade on the 400s, and it's going lower, a lot lower right now. So I'm keeping an eye on Lulu at these levels. I have a bounce level at 285.12, but anywhere from here, Lulu. We know that Lulu goes all the way to 473. So remember that sometimes we can try to chase and follow all the names that are, doing pretty nice and big. This is when names are down, it's an opportunity to get in those. So I've been trading Lulu and ANF, Abercrombie and Fitch, but you see how the difference, ANF is almost, again, it did like a nice top. It went all the way down, like kind of drawing like a big double top at 187. So ANF on the 4 hours looks interesting, but I will be careful at the 197.02 level there. But look at that chart. Like I don't know if most of you have ever noticed ANF, but look at that that move of a name. It's incredible, and it's a retail name. So I'm trying just to, once that we have all chased, Nvidia, Meta, Apple, all the bigger names, I'm trying to see other names that we can try to diversify a little my trades.
Awesome. Yeah, I appreciate the perspective, Empanada. That's awesome.
Yeah.
One thing that I wanted to kind of bring back to really bring this discussion full circle is kind of pull up this quick comparison. I think it's really important to kind of connect some of the conversations that we had earlier with essentially kind of how the market generally reacts to overall fundamental trends. And I want to just draw this quick comparison between the S&P 500 and the CPI, just to kind of close out that fundamental discussion. So I'm sure maybe some of you were trading during this time, some of you weren't. But back in October 2022, I think it's really safe to assume that most people were probably bearish at this point in time. I think I myself was even getting close to the point of being kind of bearish, not really trading short during any of this, but definitely starting to not feel so bullish anymore, which obviously ended up being not quite the correct decision. I think one of the only people that I knew was really on point was River calling for 350 as a significant bounce point. But anyway, that's not really the purpose of this discussion. That said, I want to just draw the parallel between this chart and some economic data that we discussed earlier. So as you can see here, this swing low back in October 2022 ended up being effectively the 52-week low, or now 100-ish week low for financial markets in general. And since this point, we've seen about a 55% increase in the S&P alone. I think every single one of us can think of an individual name that has outpaced that gain. Now, just to kind of bring this full circle again, let's pull up the chart of the CPI here. And I think many of you will notice here back in July 2022, this date is written in the UK way or whatever. Back in July 22, we had effectively the peak in CPI inflation at 9.1%, beating estimates of 8.8%. Just a few months later, back in October, we had dropped about a whole percent from that peak. And obviously, ever since that time, we had never really seen an increase in CPI until mid-23. And I think it's really important to note that that turn in CPI really closely corresponds with a significant low in the financial markets. Obviously, it doesn't directly correspond. This is back in July where we had another, I mean, not the bottom here, but definitely a significant low around 370. But just a few months later, the all-time low, well, not all-time low, but 100-week low, I'll say, of the S&P was put in around the same time. And there's absolutely no coincidence with that occurring. As we start to see those kind of economic trends begin to cool and move in the direction that most investors are looking for, that's when you start to see buying begin to happen once again. That's when you begin to see buyers re-enter the marketplace. And it's a trend that's so commonly repeated over and over and over again. And this is something that is not going to be the last time that we see some kind of economic event like this. And while the circumstances may differ, it's really important to understand that while some of us may not really be paying attention to what's going on in the fundamentals of the market and kind of just overall economic conditions, it's incredibly important and I'll say critical to the operation of the marketplace. And without having at least a surface level grasp of what's going on at the higher level, it'll be kind of difficult to be an investor that's looking to be, I'll say, maybe a trader or stock picker, at least with a 6 to month horizon without buying and holding. Because if you're not understanding what's going on in the economy as a whole, it's not going to give you really the best, I'll say, backing for investing in general. And when paying attention to this chart now, I think it's reasonably obvious that between December 22 and October 22, all of that was when inflation was peaking in the United States. And pretty much between those times ended up being really excellent place to be a buyer, right? Between December 22, July 22, all of this was effectively the lows of the market. And on top of that, one thing that I think is important to understand when looking at these higher time frame charts is you don't necessarily have to only be paying attention to the fundamentals, but even just some simple long-term moving averages can really help give you the conviction that you need in order to place a buy. You don't necessarily need to be the one catching the bottom at 350 like River, but rather you could pay attention to something real simple. crossover on the weekly, looking at the 20 over the 50 over the 200. This is a signal here that's happened 4 times in the last 25 years. Every single time it's led to at least 100% return on average, and been successful every single time. You look back 20 years, 25 years on the S&P, you backtest it yourself, you'll find the exact same results. And it's just kind of 2 ways of looking at the coin and being able to actually pick when the market is really beginning to bottom. So I just wanted to highlight that point, that connection between economic data and the charts, to really round out that discussion on the fundamentals. Anybody else have anything to add on the fundamentals before we kind of close that piece out?
I was just going to say one more thing is that another thing that was going on during that October highs was that 10-year putting in, well, what ended up being a temporary peak, obviously. But or those October lows rather, 10-year putting in a short-term peak after a seriously parabolic move. I mean, the thing ripped up 1.2% or something. And so when we saw that, first, and you don't necessarily want to use technical analysis on something like the 10-year, but we see it, and it's great to look at it right there on the weekly chart, putting in consecutive lower highs for 4 weeks in a row. After a parabolic move, I mean, look at that, the thing doubled, I mean, not quite, but close enough, and that is a rough sign, shows some fear going on for sure. And so when you see something like the 10-year peaking, you see VIX hitting those ridiculous highs, you see a nice sell down to an extremely major level, as Toasty, said, that weekly 200 is ridiculous, strongest level on the chart, generally speaking. So when you see all of those things kind of coming together, you can start to say, oh, maybe the market is looking to put in lows, and you never know. Of course, when you're bottom fishing on a bear market, you can get blown out for sure. But it's always important to look at all of those fundamental things. Like you said, inflation, look at 10-year, look at the VIX, look at all of those things and say to yourself, what's the market telling us? It has a lot of ways to tell us what's going on. And when you can put a few of those things together, you can start to kind of key in on some of those major highs and lows in the market. Of course, we're seeing the interesting thing where the market absolutely rallied while the 10-year ended up running to 5%, which is not necessarily normal. But you can use those indicators to help you sometimes.
Yeah, super important note there. Cool. Anybody else have anything to add on the fundamentals before we focus just a bit more on technicals to close this one out?
No, I mean, I would really just add though, zooming out is going to help you more than it's going to hurt you. In the sense with what you guys were speaking there, because you can go in there day to day and get tossed and turned, and like today, for example, especially if you're not paying attention to what's going on, but maybe you're more reactive to candles or whatever it'll be on a intraday time frame, and that might screw with your kind of whole psyche there and make you take some trades that you probably should have. Maybe you're grabbing push just because we're already selling down, and like I said, maybe we'll sell down more tomorrow too. But I kind of view it like the data that we got last week, where we sold down to whatever it was on the SPY 522 there on weak labor data early in the week. So that's definitely what I would do if you're not doing it, is starting to just zoom out a little bit more, looking at the bigger time frames, and just seeing the broader kind of trend there that we have going. That's why right now I'm in, unless I absolutely need to, maybe I over leverage to the upside when I shouldn't, but I'm not even interested in playing puts, even if we do get a decent pullback. Because right now, technically speaking, there's really nothing you can point to any pullback. I mean, we might be stretched in the near term a little bit after today's move, but we're not even close to being overbought yet. So, yeah, that's all I really wanted to add there, is just zooming out sometimes, so that way you're not missing some of the bigger moves to get those small moves intraday.
So I wanted to ask you a question, just because somebody DM'd me the question today and I gave them my response, and I wanted to see what yours was. And, they were trying to short something and got stopped out, that's fine. But in a market like this, you know, super strong market, do you really have any interest in shorting things? You know, I mean, a scalp's like one thing, but do you really have any interest in ever actually getting short? Or are you more going to be just waiting for a dip to buy? Or if you are short, maybe treating it more as a hedge? You know, do you short in strong markets, or do you just kind of wait for the dip to come where you want and wait for the upside trade?
As far as recently, unless it's on an individual ticker, maybe because there was substantial flow into it, I did. There's probably been, I can count on one hand how many in the past month or two. But no, I'd rather let the move happen. And until there's any technical reason to kind of flip bearish for maybe a broader pullback or some of the data that we're getting, like I said, if the next time I'll probably look to actually take a short position, a grab put, should I say, would be if this weekly jobless claims data that we get, if there's any serious spike above kind of the average that we've been getting, that's kind of what I mentioned earlier. Maybe then, okay, maybe the labor market's really deteriorating. The Fed remains strong as far as monetary policy goes. Could we be could they drop the ball here? Like you said today, as far as there's upside risk and downside risks. So that, or if we see payroll numbers come in below 120,000, I think the lowest we saw this year so far was 150, or maybe that was late last year, but that'd probably be the only time that I would look to actually grab puts, unless, like I said, maybe I'm super over leveraged for whatever reason, and I need to hedge something, but no interest until there's some technical deterioration or something in the labor market that kind of
Yeah.
warrants that it shouldn't be a buyer. Because at the end of the day, it is still going to be a strong year. I know seasonality hasn't really worked out too well, but it is an election year. We might have that kind of choppy period coming up here soon when all the catalysts, it's kind of what I noted on my newsletter, choppy, where we could have that healthy pullback to get some of that cash off the sidelines.
Yeah.
But other than in the near term, if there's anything on the labor kind of market, like I mentioned there, and this will be late year, but the only thing that I don't think is priced in right now, and you really can't price it in because, I mean, how are you going to predict how the elections go? But obviously you have, if Biden gets reelected, he wants to end the tax cuts that I think expire in 2025. Now, if he were to do that, that's obviously going to affect profitability companies. So that's when you're going to have those earnings revisions to the downside. So taxes go up, profitability comes down a little bit. You're going to have just some of those natural revisions, and that'll take some air out of the market too. But how we trade into that, who knows? Maybe it won't make sense if we sell off into the November elections. But those would really be the two main points: the labor market, and then coming into elections with the whole kind of tax plans, depending on who wins.
I got one more kind of technical question for you, because was the second part. The guy, he likes to be long, but he likes puts, for whatever people like being
I'm
short.
glad everybody heard that.
I
Stop.
I told him find a weak sector, short energy, short oil. And so that's my question. What do you think's up on the energy trade? I mean, they're getting
Well, and I wouldn't even get short that.
yeah, not
No.
now. Yeah.
No, and I mean in general, even when it was trading the crude was trading above 80 there, because that entire sector still has, and it's a pricey market, and that's probably why any buying that Buffett's doing is probably in the oil space. I don't know what Chubb's was. I think that was their mysterious buy, that Canadian company.
Yeah.
I want to say they're in the energy market. I could be wrong. Obviously, he's buying more Oxy, but it's hard to find value in this market. So any of those institutional value investors, that's why I say I don't want to go against it, just because of that whole value play there. But
Yeah.
the bad thing is all these companies, for whatever reason, I mean, of course you can name a reason, but they're tied to the oil prices in general. Even though many of these companies, I mean, oil is trading, 5 to 10 times higher than what their cost to break even is. So there's value there, there's profitability there, but it's a hated space, and I forget who I talked to about that today, but it's just been a hated space, and I think that's just because you have this whole AI phenomenon, where that's where the moves are happening. That's where people want to be if they want to match or beat the index, the S&P 500, and get those annual returns. I mean, Nvidia, for example, if you didn't have that in your portfolio last year, chances are you underperformed the SPX. So I just think you're seeing positioning, kind of that whole momentum ride, the chase, and energy. Just it's kind of been that relatively stagnant
Yeah.
sector.
Yeah, for like a year. I mean, energy's just, there's been some standout names. ENPH's move, of course, was insane. But yeah, I was just curious your thoughts on the energy trade. And I get it, from the technical standpoint, could start to be a buy for, like you said, the value investors here. But I just look at oh God, Rivian. I just big buys at 23.75. But I just look at, I mean, I was just looking at some of those, oil names, and they're just not looking good. And like XLE on the 2-month downtrend.
Yeah, no, it's hated, but it's cheap. But
Yeah,
until you see some rotation out of tech, and who knows when that'll be, because a lot of these hyperscalers, they're putting up numbers that it can only justify being in them. At this point, and I would say it's still real early in the cycle, but I mean, everything AI related right now, for the most part, these big names, they're driving margins, they're driving profitability, they're driving productivity. So that's where people want to be. But obviously, eventually, that trade might go out of favor, and that's when you can see some of those. I think, like Empanada was saying a little bit ago, looking at some of those names that haven't ran yet, they haven't had their moment. So, and obviously, I think oil, if you can buy, I don't know any names off the top of my head. I mean, XOM's probably a good one, decent dividend. They might be worth a small little buy, sit on it, collect a dividend. And maybe not trade around it, not look for that quick flip, because I'm not sure you'll get that. But
yeah, but long
I
term,
think you'll have your moment, and that'll be another sector too that really is going to perform based on elections come November 5th. Obviously, one of them is pro big oil. The other one is trying to really abolish the whole sector there. So it's, and then you got all the geopolitical tensions as well too. If we don't kind of get any peace there, especially in the Middle East, and if that spreads to Iran.
what do you think?
All right.
Last
Pretty
question.
much,
Sorry,
pretty
Tilio.
much made sense that I stopped trying to find the top. That's pretty much what they're trying to tell you.
Yeah,
I'm
don't
trying to
hunt
show the
tops
top
and
on a
bottoms.
bullish market.
Yeah,
No, and yeah, you got to be comfortable just kind of being less aggressive too, because obviously the market ain't gonna run forever. There will be that pullback where everyone's kind of running for the hills. They think everything's crashing, but a month, 2 months goes by, and now we're at new all-time highs again. And I think that's probably any pullback that we do see, even if we do get a move all the way down to that 200-day, which I think is probably sitting at prior all-time highs now. That would be a quick move. That would take probably 3 weeks or less, I would say. And then that would be a solid buy. But no, I just don't see the point, even though they can pay big when you hit them puts on those, 1 to 2 consecutive down days. They'll pay more than calls do, but I don't see the risk reward there until there's some real damage to the whole setup right now that we got going on, both behind the scenes and on the charts.
yep. Thanks. I appreciate that.
All right. I wanted to give the audience the last couple minutes to just rapid fire some questions. Anybody that wants something covered again, or just has any question about something we either talked about or didn't talk about tonight, go ahead, throw it in the chat, and we'll make sure we address it. And yeah, if we can't get to your question, remember Dirty River will be offering Cash App support after this. So don't forget about that. How do you determine overbought or oversold conditions? It's an interesting question. I think you're probably referring to what Tilio in specific was mentioning when he mentioned overbought, at least in the short term. Some people, when they say that term, might be referring to something kind of, I guess, more common, like the RSI or something like that, which I wouldn't say is necessarily the best way to determine that. I think a couple ways, right? Tilio has a proprietary thing that he subscribes to that tells you a little bit about that. Generally speaking, you could take it as extension from the moving averages is generally a good way, at least in my opinion, to determine something that's overbought, or extension into the Bollinger Band could be something that's considered overbought as well. So, for example, if you're taking a look at the kind of short-term moving averages, once you get a couple percent away from that 1020 EMA or 921, whatever you're looking at, that's when you're starting to get into that overbought territory. However, right, something that's overbought can stay overbought, something that's oversold can stay oversold. And something that stays overbought over a long period of time can simply just be an indication of strength. So in no way does overbought conditions mean it's time to sell or it's time to go short, especially if it continues. So I don't know if anybody else has anything to add on to that, but thoughts for tomorrow's news. I guess we'll find out tomorrow, I think is the big idea. Yeah. In terms of thoughts, you guys have any specific opinions, Tilly or River? Any kind of predictions or things that you're looking for? I personally don't.
And they are expecting a great big old drop in PPI. And so I'll be curious to see. I think we could get a nice move off of it. You know, swingers are locked in at this point, but
Right.
you know, they're expecting a big drop in PPI. So the market, I definitely think it will want it to meet that, you know.
Kyle has a question. What's the 3 best indicators to look at before entering a call? You've been looking at VWAP and EMA. The short answer is none of those that you listed. Yeah, I would say, I would say honestly, I think first consider price and volume as indicators in themselves. Those would be the top 2. Pay attention to price. How are we trading relative to key hourly pivots, key daily pivots, etc. Pay attention to volume. Are buyers present at the lows? Are they present on a breakout? Are sellers in control? Buyers in control? After that, then you can start to think a little bit about other indicators. VWAP and EMA or VWAP in general, I think is high quality for, you know, that shorter term, you know, maybe 5, 15 hourly types of trades, maybe for day trades or maybe shorter term scalps. And yeah, like River mentioned, in terms of EMAs to pay attention to, I personally like the 10 and 20 EMAs on the daily or the hourly 20, and then same EMAs on the short term as well. But those are generally my preference. Everybody has kind of their different EMAs that they look at, but for the most part, that's the big idea. Best way to learn TOS like you all do. Practice. Just use it, open it up, download it, start playing with the charts. That's the best way to learn anything, whether it's trading, using software. Get it open, get your hands on it. Just set it up the way you like, colors, lines, whatever it might be, and just start using it. You'll get good at it real quick. It's not too complicated. River could figure it out, and the guys on AARP, it's been, yeah, not too bad. iPhone says, should you expect a pullback on SPY? I think I'd probably defer. Tilly gave a really good explanation on this earlier. In terms of expecting one, obviously it's always possible, right? I think in terms of ever expecting a pullback, it's always reasonable to be prepared for that, at least in your trade plan, right? You got to have a place where your trade is no longer valid. In terms of expecting one in the short term, we'll find out tomorrow at 5:30 in the morning when PPI comes out. If we're going to get one or not, but definitely would be looking to those short-term levels, at least for a bounce. Today's lows being notable. The lows of this CPI candle, those are always significant right around those 537s, which lines up with the previous day's highs as well as hourly highs. So if we were to get a pullback, I think it'd be real important to pay attention to that 540, 537, and 5400 SPX, which should line up with one of those levels. I don't remember which one. It's like right in the middle. Anyway. Anybody else have anything to add on those questions? What is cheddar flow used for? Yeah, Flips would be the most qualified to answer what he looks for specifically. I can't really put words in his mouth on that one, but in general, cheddar flow is used to understand options flow. So understand large options transactions on individual equities and get information related to them. So it'll tell you the size of large option transactions, if they took place at the ask or the bid, etc. But yeah, that question, Flips isn't in here unfortunately anymore, so I'm not going to put words in his mouth, but yeah, generally speaking, when you're looking at flow, you're looking for transactions that are unusual, not normal. So, for example, $1 million transaction on the SPY for a couple months out there's nothing unusual about that. But $1 million transaction for a weekly call on something like Snapchat or Rivian is something to be paying attention to, especially if it takes place at the ask. Same thing goes for the other direction. I think I was looking at Flow for Snapchat a couple weeks ago, and they had a $3 million couple month out. I can't type. A couple month out transaction for puts that ended up marking the swing high on the daily. So generally speaking, when paying attention to flow, you're looking for transactions that are unusual, but important to note that at the end of the day, you can never truly understand intent behind flow. Just because you see one large transaction taking place on the call side, bid side, or call side, put side, asks side, bid side, whatever it might be, you'll never fully know exactly the intent behind the trade. You could make really good guesses with a high probability of being correct, but you have to be mindful that somebody could be buying $3 million of puts and own $300 million of shares, right? So it could just be a hedge. So you'll never truly know exactly what the intention behind flow is. That's why generally it's important to use it in conjunction with the charts and at least have a general idea of trend. And yeah, anyway.
Yeah, I like everything you said there, Toasty, except for the Rivian part. Nobody's slapping the ask on Rivian. Let's be real here.
Yeah, I'm the only one that I'm the only one that shows up in the flow there, buddy.
Only sells.
It's just me, partner. It's just me. I'm reformed though. This is an interesting question. You've lost 15 funded accounts that you didn't pass in the last 2 weeks. Before I even read the rest of your question, I personally don't like the idea of funded accounts, but I think that's a bias that I hold myself. 15 funded accounts in 2 weeks sounds like an incredibly aggressive number, but I personally don't really get involved in all that. So I think River would probably be the best qualified to talk about the whole funded account situation. But personally, I'd say stop paying people to buy the funded accounts and paper trade.
Yeah, I'd stop buying funded accounts and stop putting the whole funded account into one trade, and that will help a lot for sure.
Have we had any cheddar flow class before? I don't think we've had a cheddar flow specific class, but we've had multiple classes on interpreting options flow. And cheddar flow is just like any other flow service. There's not really much special about it. And honestly, I think sometimes some of the flow on there could be a bit inaccurate. I've seen some of the things they post on Twitter, and you compare what they post to other flow services, and they got the transaction completely wrong. So, I mean, I know Flips likes it. I've seen some weird things that go on that service. But the answer is no, we haven't had any specific cheddar flow class.
Flips is the only person I've seen use cheddar flow well, if I'm being honest.
I think Stock Daddy probably used it at some point.
I miss quant data.
I know, bro. He needs to get that thing back. Paper trade first and then get funded. Yeah. Prove your consistency in paper first. At the end of the day, when you're trading those funded account challenges, all you're doing is paying money to paper trade a port. And if you're not finding success in when you pay money to paper trade, you might as well just do it for free and trade realistically when you paper trade, right? Generally speaking, the problem when people paper trade is they think it's a good idea to go all in or not trade realistically, which seems like what you're probably doing with the funded accounts. And some of those funded accounts, they won't even pay you if you get funded and you're full porting. Like they'll just ban you or kick you out. And feel free to correct me if I'm wrong, River. But from what I'm aware of, you got to trade consistently on those funded accounts. You'll get kicked out of the funding if you don't trade consistently and trade right. So you're gonna need to drop the YOLOing if that's something that you're getting involved in, because they're not gonna let you stay on. When do you look to use fibs? That's a good question. Generally speaking, a good time to use fibs is when you're trading in price discovery. And what I mean by price discovery is you're trading somewhere price hasn't traded before. So the question always comes up, how do you get levels after all-time highs? And the answer that I typically provide is 2 things. Either fibs, well, 3 things technically. Fibs, psychological levels, or B-bands. So the B-bands are going to be kind of those short-term extension targets after you break all-time highs. When I say B-bands, I'm referring to the Bollinger Bands, which just are essentially, you could, I guess, call them volatility bands maybe, but I don't even really want to try and necessarily define them in a short answer. But in summary, they kind of provide a reasonable range for price to trade in based on the past 20 days of price action. The bands are a +2, -2 standard deviation above the mean. So it's kind of statistics based. Fibs is just a mathematical calculation. So it's just applying math to the range that you generate the fibs in. And then psychological levels, some examples of that would be like 500 on SPY, 550, 600. Those levels, I guarantee, are all going to be key once we trade into them. When you give levels, do you take the trade as soon as price touches the level or only if the candle closes on that level? How does it work? Generally speaking, most people should only be trading candle closes. You got to be patient to see how the bar actually closes at any key level for the most part, unless you could kind of afford, having that quick stop out if you close right below. In terms of trading levels, how I personally like to do it is generally speaking, I like to look for volume to come in at that key level and some kind of reversal bar close at that same level. So for example, if we're coming into a level of support, I'd like to see on the shorter time frames, a bull bar closing near its high, generally with a long downside tail on increasing buying volume. You can't really argue with something like that. It's pretty evident that a reversal is either about to take place, going to take place, or at a very high probability of taking place. So me personally, I generally like to react to how the rest of the market does at that level, at least for those bounces of support. I'm sure River has something else to add for a scalping mindset, though. So I don't do that. I can't think that quick. How can you learn to be consistent and get rid of your full porting addiction? Been blowing your accounts over 6 years already and keep coming back and doing the same thing. Unfortunately, the answer that I'm going to tell you, you're probably not going to like it. But the way this works is it's all self-driven, right? You're the only person who can hold yourself to your trading rules and your discipline, right? It's just like your discipline and anywhere else in life. Like if you tell yourself you're going to go to the gym every night and you don't go to the gym every night, that's your own damn fault. Like you need to be the one to take your ass there, get in the gym, do whatever you got to do. Me personally, I don't go to the gym. I just go sit in the parking lot and tell River I'm there. But the short answer is it's all on you. You need to be the one that drives your own motivation. And if you truly want to get better at trading, it's on you to develop the discipline to do things the right way and take action and learn. Because if you don't, nothing's going to change, right? You can do that. Yeah, exactly. Empanada says insanity is doing the same thing over and over again and expecting different results. You keep full porting, it's not going to change, right? And you call it an addiction, and maybe it truly is. And you got to really kind of dial that back. And I can't give you the answer. However, I can't give you the specific answer. However, I can tell you that it's going to take effort. You have to be very conscious. And every single time you think you're about a full port, you got to make the conscious decision to not do that. So unfortunately, the answer is it's on you. However, I can give you all the tips and tricks and advice you need to help you get there. But yeah, at the end of the day, you're the only one that can change your own behavior. I unfortunately can't look over your shoulder every day and tell you to not doing something stupid off. You gotta do that yourself. So feel free to reach out. We can talk in a bit more detail on helping you get some of those things figured out. But yeah, I'm happy to kind of talk to you personally about those sorts of issues. That's not a problem at all. But yeah, the short answer is at the end of the day, it's all you. What do I find to be the most valuable studies to use while looking at charts? Volume, always going to be the most valuable study. I know some people consider that to be a study, but I would say it's absolutely not. Volume for me and EMAs and SMAs. So I'll just say volume and moving averages are my favorites. So in terms of the EMAs that I like the 10 and 20 EMAs. I also have this little study that I have that shows high volume very clearly in yellow. Yeah, EMAs, so 10 and 20 EMA, and then SMAs, 20, 50, and the 200 SMAs. That's pretty much all I'm watching, and the hourly 20 EMA. So like, for example, for my short-term charts, we got the same thing going on. It's the hourly 10 EMA above the hourly 20. I also mark out the previous day's close, and then the hourly 20 EMA also plotted below. That's it. Very simple. So I'm definitely not reinventing the wheel with anything that I look at. It's nothing too crazy. And if you're looking for any of the studies that I've shown you tonight, every single one of them is posted in my tab and pinned. So if you use Thinkorswim or want to use Thinkorswim, they're all here for you. Not tonight, Norman. Not tonight. We'll get to him next week. All right, everybody. Well, we're actually, if you DM me, Norman, I'll look at it another time. I want to just thank you all for being here tonight. We don't do these lectures all the time, but we really appreciate when you guys show up and ask all these amazing questions. If you guys, if this is your first time at a lecture, first time you've been to one of our classes, I hope you're now motivated to come to the next one. We have classes 5 days a week, every single week, around the same time, 5 to 6 Pacific or 8 to 9 Eastern. It's starting at one of those times. So hopefully it's flexible enough for most of you all to be able to make it. Every single class is recorded. So if you're ever looking to watch a class that you weren't able to make it to, go ahead, check that recording out. It's all posted in the Discord. And if you're joining us from Instagram or aren't currently a member, happy to have you. Thank you for being here tonight. If you're interested in seeing some more of these lectures, go ahead and navigate to our website. yeah, come check out a membership with us. And yeah, thanks again so much for everybody's time. Appreciate you guys all being here. If you guys haven't noticed already, these lectures are our favorite thing to do here. Me personally, this is my favorite part of the job here. So thanks again so much, everybody, for being here. I hope you guys have a great rest of your night, and we'll see you all in the next one. Have a great day, everybody. Thanks so much.